Okay, so in my trade planning segment, I'm going to review FXI, the iShares Large Cap China ETF. It is a look at the daily and weekly charts here with a focus on the intermediate time frame. And like we always do, we want to be focused on the core trade planning questions. So we want to use our technical evidence that is generated by our methodology to be able to determine, number one, a directional bias. But even before you do that, it's critically important to have a sense of what your outlook period is and really be set on what that is, because your outlook period is going to drive the rest of your analysis. And in particular, those key levels and reevaluations. So again, you want to start with that outlook period, then you move into your directional bias. So let's look at why I'm looking at here a negative overall directional bias. So I'm going to start on the left side here, which is the weekly chart. And FXI really in the last cycle, it was a very, very powerful upside move. For the most part, it was a right-hand translation, but once it peaked, it sold off really hard. And you can see here that it has continued that sell-off for several weeks now, actually a few months. And there's been some technical occurrences that have been very negative here over the last few weeks. I'm going to point those out. First is that when we came into the cycle low timing window, it did make a low and then it had an attempted rally. That attempted rally failed, and the subsequent decline here has taken out that cycle low support. So that's a cycle low breakdown. And if this could be a very early left-hand translation, which would be overall very negative to this intermediate cycle, given that there are still several months to go. Even if this is a late low forming, the overall pattern structure currently with this breakdown is negative, and you also have the negative momentum in the reversal scout. If we move over to the daily chart to zoom in on the price action a little closer, you can see here that we had a rally attempt in the rising phase of the daily cycle, and then as we peaked, we have now taken out the cycle low support. So we've had a breakdown on the daily chart, which coincided with the breakdown on the weekly chart. Both of these patterns now are overall negative. We have momentum that is negative in both time frames as well. So the patterns and the momentum suggest that rallies are likely to struggle and the risks are to the downside, and the patterns are calling for a downside projection in the intermediate time frame to test that 61.8 and then even get a little deeper. So I have a projection zone here of 2420 to 2355 over the next several weeks. The reevaluation level would be a close back above, a weekly close back above the 61.8, which is near 2662. So that's what you'd want to watch for, because that would neutralize this negative pattern and require reevaluation of those downside targets. If it was to break above the 78.6, that would negate the negative bias and actually would force me to look at a positive potential situation that could be developing. And that's why the great thing about the askSlim methodology is it allows us to be agile. We do not have a personal bias. We go with the flow, the money flow patterns, and we let the charts do the talking. And there would be no problem shifting gears and preparing for an upside opportunity if that's what presented itself. However, at this time, the conditions are overall more negative than positive.